Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 3. This is section C1, and this is an application topic. Calculate the net position balances, meaning unrestricted, restricted, and net investment in capital assets for state and local governments, and prepare journal entries. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then, of course, you're probably going to want to learn more, so make sure you also check out buying our study materials or buying the pro course, or especially buying the total bundle, which has all of our materials, including the pro course. And one of the things that is included with the study materials for each exam, or at least we're going to be changing it to be that way in the near future. It's currently part of the pro course, but again, we're going to make what I'm about to talk about a part of the study materials. We have full 10-question versions of these 5-question YouTube videos. So in this YouTube video that you're watching right now, we're only going to be going over 5 questions, but frequently we have member versions where we will go over an additional 5 questions so that people can get a little bit more help and a little bit more understanding if they have the study materials from SuperfastCPA. Now, if I'm being totally honest, this is one of the few videos. This has happened a decent amount in BAR, but it doesn't happen as much in the other exams. I just have run into this a lot with BAR. This is a topic that definitely needs to be covered, but it's pretty narrow, it's pretty small, so we're only going over 5 questions in the YouTube version and in the member version for this video. But again, usually there is a 10-question version for members, but again, this is a topic that I think we can cover in 5 questions pretty easily, and you'll know what you need to know whether you're watching this on YouTube or watching the member version. But again, as a reminder, if you like this, check out buying our study materials or buying the pro course, or of course buying the total bundle, so you can get access to all of our great stuff from SuperfastCPA. Now, with all that out of the way, let's dive into the first question. All right, here we are at question 1. And something I always like to point out if it's an option is you want to read the last sentence of the question first. This is a good habit to be in. You know, it might not always be 100% useful, but it is very useful in a lot of circumstances, because when you read that last sentence of the question first, very frequently it will give you context or give you the actual question that you're dealing with. If you read the whole paragraph first and then you get to the question, you probably are going to end up needing to go back up to the paragraph and reread it because you didn't know what you were looking for originally. But if you read the last sentence first, very frequently it will give you an idea of what you're supposed to be figuring out from the start. So that's why we do that. It's a good habit for test day. Let's do that here. Which of the following should report net position? Let's go up to the top. A city is preparing its financial statements. The accounting staff is reviewing which statements should report net position instead of fund balance. So again, which of the following is supposed to report net position? The general fund balance sheet, the governmental funds balance sheet, the enterprise fund statement of net position, or the budgetary comparison schedule for the general fund. Now, if you have no idea what this is even talking about, maybe you haven't watched some of the previous videos where we've talked a little bit about governmental funds and net position, or again, you're just using this video to kind of start learning about this, that's okay. We are using these questions to learn what we're supposed to be doing when it comes to net position and this blueprint task. So if you don't know which one of these is going to be reporting net position, that's okay. We're going to be using this question to learn. So let's go ahead and dive into the answer to start getting a foundation. All right, here we are. The answer is C, the enterprise fund statement of net position. Now, that one probably wasn't too difficult if you just read through the options, because that was the only one that said net position, while all the other ones said something about funds. But again, if you didn't do that, that's okay. We are using this question to learn. So let's go ahead and dive into the explanation. Proprietary funds, including enterprise funds and internal service funds, report net position. Government-wide financial statements also report net position. Governmental funds, such as the general fund and special revenue funds, report fund balance instead. Budgetary comparison schedules are also tied to governmental fund budget reporting, not net position. So the basic rule is that we're going to be building on the rest of this video is that government-wide statements and proprietary funds use net position, and we're going to dive deeper into how you separate the categories of net position, and governmental funds use fund balance. Now, we have talked about fund balance and governmental funds and things like that in previous videos, and we might talk about them a little bit more in future videos. But in this video, again, we are focusing specifically on net position and the 3 categories of it when we're talking about government-wide statements and proprietary funds. So now that we have that basic understanding, let's go to the next question. All right, here we are at question 2. What amount should the county report as net investment in capital assets? Okay, and by the way, imagine you were on test day, you were at the exam center, you see this question and you immediately read, report as net investment in capital assets. You immediately know that you're dealing probably with governmental funds or something to do with government because, again, net investment in capital assets is something that you wouldn't really see on a normal balance sheet. So again, you're just getting these little clues, this little bit of context. That's why you read the last sentence first. And of course, that's assuming that you've actually studied and have some of this in your mind. But anyway, let's go up to the top. A county reports the following balances in its governmental activities. They have capital assets of $1,240,000, accumulated depreciation of $320,000, bonds payable issued to acquire and construct the capital assets for $510,000, and a portion of the bond proceeds that remains unspent at year end was $75,000. So out of those $510,000, $75,000 was not used. Accounts payable related to general operations was $44,000. So what amount should the county report as net investment in capital assets? Now again, we are using these questions to learn. So if you don't know how to calculate this, that's okay. We are learning the different pieces of net position. But if you want to give this a try, maybe you've kind of seen this before, go ahead and pause the video, try it on your own, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is C, $485,000. Now let's go over this to help you understand how we even get to that point. Net investment in capital assets includes capital assets net of accumulated depreciation and then reduced by the capital-related debt. So any debt that they used to get the capital is going to be subtracted from the capital assets when it comes to net investment in capital assets. However, if part of the bond proceeds or whatever proceeds they were for the debt have not been spent yet, that unspent portion is excluded from the calculation. The unspent proceeds have not yet been turned into capital assets and would be counted as unrestricted net position. And we'll talk more about unrestricted net position in a couple questions. But again, this is the part of net position, which by the way is kind of like the equity side of things when it comes to the government-wide statements and the proprietary fund statements. Again, we're kind of talking about equity, but from that side of things, from the government side of things. So net position has these three different parts, and we're learning how to calculate the net investment in capital assets, which is one part of it. Capital assets was $1,240,000, and we subtract the accumulated depreciation of $320,000, and that equals net capital assets of $920,000. The bonds payable was $510,000, but remember, $75,000 of the proceeds from those bonds payable are still unspent, so they haven't been used to get capital assets. So only $435,000 of the debt is treated as reducing net investment in capital assets. So we take $510,000 less $75,000, giving us $435,000. So that takes us from $920,000, which is just the net capital assets, and then we subtract the investment in the capital assets, and that gives us a total of net investment in capital assets of $485,000. So just to make sure that you see a key difference there is a difference between net capital assets, which is just the capital assets less the accumulated depreciation, and then there's net investment in capital assets where you take that number that you just calculated from the net capital assets and you subtract whatever debt was used to purchase the capital assets. And as a part of that, remember, any debt that wasn't actually used to buy the capital assets is not going to be included when you do this calculation of net investment in capital assets, which is why we took this $75,000 of bond proceeds out of the $510,000 of bonds payable. Now with that, we learned one part of net position out of three. So there's three pieces to net position that add up to total net position. And so we learned the first one, which is net investment in capital assets. Now let's go to the next question to learn the next piece. All right, here we are at question 3. How should the remaining $90,000 be reported in the town's government-wide statement of net position? Okay, let's go up to the top. A town received a $280,000 grant from the state. The grant agreement says the money may only be used to improve public walking trails. By year end, the town has spent $190,000 and still has $90,000 remaining. So again, how is that going to be treated, that $90,000 in the government-wide statement of net position? Is it going to be restricted, unrestricted, assigned, or committed? Now, we haven't really talked about all the pieces of net position yet, so we don't know if it's restricted, unrestricted, assigned, or committed. But if you have any idea, that's great. You can give this a guess. But let's go ahead and dive into the explanation if you're not going to pause it so that we can learn about the next piece of net position. Okay, here we are. The answer is A, it would be restricted net position. And you probably could have inferred that from what we talked about at the very beginning of the video, what this task is about. we're learning about the three different parts of net position, and we named them at the beginning of the video, but if you didn't remember, that's okay. So we learned about net investment in capital assets, and now we're learning about restricted net position. Let's go through this to make sure that we understand the difference between this and the net investment in capital assets. Restricted net position exists when resources are limited by external parties, and I want you to pay close attention to that, external parties, or by law, grant agreements, bond covenants, or other legally enforceable restrictions. In this case, the state grant agreement restricts the remaining money for trail improvements, so the $90,000 is restricted net position. So unlike with the net investment in capital assets, where some of the money wasn't used, so it's actually unrestricted at that point, in this case, they gave them $280,000 of a grant, and they said that that money, all of that money, has to be used to improve public walking trails. So even though they've only used $190,000 of it, the other $90,000 is still restricted for that. And it is restricted for that use by an external party, by the state who gave them the grant. So that's why it's $90,000 of restricted net position. Let's talk about a couple of the other things that we saw here. Assigned and committed fund balance are governmental fund classifications. So they have nothing to do with net position. They're not government-wide net position categories. So if you ever see any question that's talking about net position for government-wide statements or proprietary funds, and you see an option like assigned or committed, remember, those have nothing to do with net position. Those are a part of other fund balances, like governmental fund classifications. So that's a pretty easy thing to remember there. But anyway, again, assigned and committed fund balance are governmental fund classifications, not government-wide net position categories. Assigned fund balance means resources are intended for a specific purpose, usually by management or delegated authority. So, management in the government is saying, we want to set this money aside for this specific purpose. But notice, it's within the government. It's not from an external party. And then committed fund balance means resources have been formally set aside by the government's highest decision-making authority. But again, notice the difference there. It's still by the government. So whether it's committed or assigned, that money is being set aside or formally set aside for something by the government itself. But when money is restricted, when it's restricted net position, it is coming from an external party, like we said, by the law, from a grant agreement, from bond covenants, or other legally enforceable restrictions, things that are not the government management, but external parties. Now, to keep going a little bit, a basic entry to record the grant revenue could be something like you would debit cash for the $280,000, and you'd credit program revenue, operating or capital grant for $280,000. But again, the main thing that we want to understand here is the difference between restricted and assigned and committed, and the difference between restricted and net investment in capital assets. The external restriction does not mean the cash is a liability. The government received the resources, but the remaining net position is restricted because the resources must be used for a specific purpose. So again, externally restricted for a specific purpose. They cannot change what that money is to be used for. Whereas if you think about it, if management set money aside for something, they could probably change that somehow and choose to use it for a different purpose. But since this was an external restriction, they can't say, well, we want to use this money for something else anyway. So we learned the second piece of net position there, restricted net position. Now let's go to the next question. All right, here we are at question 4. What amount should the city report as unrestricted net position? So as you can guess, this is the third piece of net position, and there's only 3 that we're talking about, so this is it. A city reports total net position of $840,000 in its governmental activities. Of that amount, $520,000 is net investment in capital assets. The city also has $95,000 of grant resources that must be used for public safety programs under the terms of the grant agreement. So what amount should be reported as unrestricted net position? Now, based on what we've learned so far, I'm guessing that if you just think through this, you'll probably be able to figure out the correct answer because it kind of gives it all to you right there in the question. So pause the video if you want, do the calculation, figure this out. When you're ready, come back. We'll look at the answer together. All right, here we are. The answer is B, $225,000. Now, this is the simplest of the 3. We're going to go through this and you'll think, wow, this is a lot easier than the other 2. Unrestricted net position is the amount left over after net investment in capital assets and restricted net position are removed from total net position. So it's literally just what's left over. The city has total net position of $840,000. Net investment in capital assets is $520,000, and restricted net position is $95,000. because the grant agreement limits those resources to public safety programs. Again, it's a grant agreement external from the government management, so it is restricted. So the unrestricted net position would just be 840,000 less 520,000 less 95,000 equaling $225,000. Again, the key here is that unrestricted net position does not mean that the government has cash sitting around with no purpose. That's not what it's saying. It simply means that portion of net position is not tied up in capital assets and is not externally restricted. They could still restrict it, in air quotes, for something that they want to use it for. Management could do that, but because it is not externally restricted, it's still counted as unrestricted when it comes to calculating net position. So just to make sure that's clear, restricted and unrestricted, they can both be quote unquote restricted for a specific purpose, but something would be restricted if its external restrictions are there, and something would be unrestricted if the restrictions are only coming from inside the government, like management or something like that. So with that, let's go to question 5. All right, here we are at question 5. What amounts should the city report for net investment in capital assets, restricted net position, and unrestricted net position? So just based on that question right there, before we even look at everything else, seems like this question is kind of asking us to take everything we've learned so far and apply it. So let's go up to the top. A city reports total net position of $1,475,000 for its governmental activities at year end. The city also reports the following information. They had capital assets of $2,350,000, accumulated depreciation of $610,000, bonds payable issued to acquire and construct the capital assets for $880,000. There was a portion of those bond proceeds that remains unspent at the year end of $120,000. They had grant resources restricted for public safety programs of $140,000 and resources restricted by law for debt service. So with that, we're going to take everything we just learned how to calculate, and figure out how to get each piece of net position in this question. Now, I would like you to, at this point, since we've learned all of this in the previous questions, I want you to pause the video, do this on your own, figure it out, see if you can get the right answers, and when you're ready, come back, we'll look at the answers together and see if you got it and go through the explanation to make sure that you're understanding everything. So again, come back when you're ready. All right, here we are. The answer is B. The net investment in capital assets would be $980,000. The restricted amount would be $235,000, and the unrestricted amount would be $260,000. So let's go through this to make sure that you understand how we got to each of those numbers. Net investment in capital assets, we'll start with that, starts with capital assets and is net of accumulated depreciation. So first we get the net capital assets, and that's $2,350,000 less the $610,000 of appreciation, and that gives us $1,740,000. Then we subtract the capital-related debt, but only the portion of the debt whose proceeds have been spent. So remember, even though they had $880,000 that they got for the purpose of building and buying capital assets, they only used $760,000 of it. And that's subtracting the $120,000. That amount remains unspent. So again, only $760,000 reduces net investment in capital assets. And here's the calculation, $880,000 less $120,000 equals $760,000. So the net investment in capital assets ends up being the $1,740,000 of net capital assets less the investment of $760,000 that was actually used on capital assets. And that gives us $980,000 of net investment in capital assets. So that's the first piece of net position. Next, we go on to restricted net position. Restricted net position includes the grant resources restricted for public safety and the resources legally restricted for debt service. Again, these are external sources restricting it. The grant is the external force, and a legal or law, something to do with the law, is restricting the other thing. So they're both restricted, not unrestricted. So $140,000 plus $95,000 equals $235,000 of restricted net position. Finally, we get to unrestricted net position. And again, this one's a lot easier. You just basically subtract the other two that you just calculated from total net position, and it gets you to the correct amount. So unrestricted net position is the amount left after subtracting net investment in capital assets, and restricted net position from total net position. So $1,475,000 less $980,000 less $235,000 equals $260,000. So the final amounts are exactly those. $980,000 for net investment in capital assets, restricted net position $235,000, and unrestricted net position of $260,000. And as a reminder, this $1,475,000 is talked about right at the very beginning of the question. So with that, we've learned a lot about how to calculate net position. There are three parts to it when it comes to the government-wide statements and the proprietary funds, and it is net investment in capital assets, restricted net position, and unrestricted net position. We just learned how to calculate all of that, and before we do anything else, let's do one more part of the SuperFast CPA process called pillar topics. Now, as a reminder, the idea behind pillar topics is as you're going through the questions or sometimes the textbook, you will notice the things that keep popping out, the key things that you noticed and that you kept getting asked about. And so you take a moment and write those things out in your own words as the pillar topics, the key points that you were supposed to learn so that you, again, know what you're supposed to know for exam day based on the questions. So let's go ahead and go to the pillar topics for this video. All right, here we are at the pillar topics. Again, this is kind of a summary, just the key points that we were supposed to understand from doing those questions. So first off, net position is reported in the government-wide financial statements and in proprietary fund financial statements. It's also technically in the fiduciary fund financial statements, but it's looked at a little bit differently there. It doesn't have the same three pieces that we just talked about in this video, so that's why I didn't talk about it here. So again, think about government-wide financial statements and proprietary fund financial statements when we're talking about these three pieces of net position. Governmental funds do not report net position, they report fund balance. So fund balance compared to net position, there's the difference there. Now let's move on. Net investment in capital assets starts with capital assets, then reduced by accumulated depreciation. Then you subtract the debt related to those capital assets. If part of the debt proceeds is still unspent, that unspent portion is not included because it has not been used to acquire or construct capital assets yet. So we take that out of the proceeds from that debt. Next, there's restricted net position, and this includes resources that must be used for a specific purpose because of, and this is the key thing here, an outside restriction or legal requirement. The key issue is that the government itself did not simply choose the restriction. So again, the government didn't set this up. Some other entity or law did that, and that's why it's restricted. Unrestricted net position is what remains after subtracting net investment in capital assets and restricted net position from total net position. It does not necessarily mean the government has extra cash available. It just means that portion of net position is not tied up in capital assets and is not externally restricted. Kind of as a quick example of that, imagine if management set aside $100,000 for something that they wanted to do in the government. To them, they're setting that money aside. They're kind of, in quotes, restricting that money. But because management did it, because the government chose it themselves, in net position, it's considered unrestricted net position. So I just wanted to make sure that's clear. But that's pretty much it. Again, we went over 5 questions in this video, and normally in the member version of the video, there are 10 questions so that people can get a little bit more help and a little bit more understanding if they purchase the super material. Now, as I mentioned at the beginning of this video, this is one of those times where there's only 5 questions for YouTube and for the member version because honestly, we just learned everything you need to know, and I didn't feel like it was super necessary to do it all over again when you learned everything that you need to know in these 5 questions. But again, most of the time, there are 10 question versions of the videos so that you can get a little bit more help and a little bit more understanding. So if you liked this, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then after that, you'll have a much better path to learning about and becoming a part of SuperFast CPA. You'll know more about the study materials, about the pro course, or the best thing is to get the total bundle, which includes all the study materials and the pro course. So again, if you're interested in this, make sure you check out the webinar and go from there. Now, if you liked this video, make sure to like it and leave a comment in the YouTube video. With all that said, thanks for watching or listening, and I will see you in the next one.